I made $50,000 last month trading, and in today's video, I'm going to explain the two price action concepts that help me achieve these results. When combined together, these two price action concepts become one of the most powerful trading strategies. It doesn't require any fancy indicators, daily buys, and the best part is sets up every single day. So with that being said, let's get straight into the video. Alrighty, so in today's video, we're going to talk about combining two of my favorite price action concepts together. When you use each one of these concepts separately, it is very powerful, but if you can combine them together, it really gives us a whole wide variety of scenarios that we can use coming into market open every single day. And the two concepts that I'm going to be talking about today that we can combine together is the box theory along with the opening range break. So most of you guys already know what the box theory and what the opening range break is, but I'm just going to quickly go over once again. So what we can do is mark out our previous day highs. We can also mark out our previous day lows. And this is what's called the box. So whenever we have its previous day range, we essentially want to box in our previous day highs and our previous day lows. And these are going to be key levels that we can use as liquidity. So we can be looking to trade up in towards those levels, or we can be looking to take trades off of your previous day highs and previous day lows. And then we also have your opening range break. So your opening range break is your first candle of New York session open. This can be on the 1 minute, this can be on the 5 minute, this can be on the 15 minute. I'm going to talk a little bit more on exactly what time frame that you should be using the opening range break, depending where you are inside of the box or maybe you're outside of the box. So basically what we're going to do is mark out the high of the candle, we're going to mark out the low of the candle, and this is what's called our opening range. And if we want an opening range break, we're going to be looking for the break above your opening range candle for continuation towards the upside, or we're going to be looking for the opening range break towards the downside if we're looking for continuation lower. As you can see, these strategies by themselves are fairly easy to understand, but when we combine the box theory and the opening range break together, there's a little bit more nuances that we have to look for when combining these strategies together to give us a high probability setup. So with that being said, let's go on to some of the scenarios that we can be looking for when trading the box theory in combination with the opening range break. So these are some of the scenarios that we can be looking for on any given day. There's really four scenarios that we can be looking for. It's broken into inside the box and outside the box. Let's first start off with inside the box. So for inside the box, that means we're in between the previous day highs and its previous day lows. The first scenario that we have is no clear direction. So if there's no clear direction within the first 15 to 30 minutes, we're inside of its previous day range. What this equates to is no trade. So no trade means we're not going to be looking for any trades within the first 15 to 30 minutes. This doesn't mean that price can't set up later into the day. I'm strictly talking about the open and looking for trades that set up around 9:30 to 11 a.m. Eastern Standard Time every single day. The second scenario that we have is break outside the box within the first 15 to 30 minutes. If we can break outside the box within the first 15 to 30 minutes, this generally shows that we're either very strong and we want to continue outside the box, or potentially we could break outside the box and then we can look to reject and come back inside the box. So this really gives us a potential trading opportunity because that means we're going to go to either the top of the box or the low of the box, which means there's going to be liquidity. And whenever there's liquidity, there's potential trading opportunities around those key levels. Next, what we have is outside the box. So we just talked about what happens if price is inside the box. We can either be looking for trading opportunities or no trades. Now we're going to be talking about outside the box, which really means outside of its previous day highs and previous day lows. This is scenario number 3, which is continuation is in play in the first 15 to 30 minutes. So if we're outside the box, generally speaking, that means we had a gap. So we had a gap overnight, and what we can be looking for is what's called a gap and go or a breakaway gap. This means that price is already outside the box coming into market open, so we can expect continuation towards the upside right away if there's a higher time frame thesis. Number 4, what we have is a potential reversal in play. So if we're outside the box, there's always a potential that it rejects the top of the box and we come back inside the box. So in this case, a reversal is also in play within the first 15 to 30 minutes. So we can be looking for what's called the gap fill. So in this case, when we're outside the box, generally speaking, we can be looking for trading opportunities within the first 15 to 30 minutes of market open. If we're inside the box, generally speaking, there's probably going to be no clear direction and we're going to be waiting for a potential trade to set up maybe later into the day. So with this being said, let's dive into each scenario a little bit more in depth. So number one, scenario inside the box. This is a no trade zone. So as you can see right here, I have the box drawn out. So this is the box theory. We box in our previous day highs, and now we also box in our previous day lows. Now what we're going to be doing is marking out the first candle of New York session open. So you can see I have our opening candle range high and our opening candle range low. So this is going to be the first candle of New York session open. This can be on the 1 minute time frame, this can be on the 5 minute time frame, or the 15-minute time frame. And in this case, whenever we mark out that opening range candle and we're in between its previous day highs and lows, generally speaking, I do not want to be looking for a trading opportunity within the first 15 to 30 minutes, because majority of the times, if the candle is neutral within the first 5 to 10 minutes, that usually means we're going to be chopping, and it's going to be very hard to trade because you're far away from your highs, you're far away from your lows, and this is really where you want to be looking for entries, is at the high and low of the range. So in this case, the time frame that we want to be on is minimum the 5 minute and the 15-minute time frame opening range. What we don't want to use in this case is the 1 minute opening range. If we use the 1 minute opening range, there's a very good chance that we're going to get faked out and we're just going to come right back inside the range because we're still in between its previous day highs and previous day lows. So if we're inside the box, we want to use minimum the 5 and 15-minute opening range, because that means we're going to have to wait for price action to develop. We're going to be waiting regardless. So we want to be on this higher time frame. So if price does want to break out, it's most likely going to break out later into the session because we're inside of the range and we want to be on the higher time frame so we don't get faked out on that 1 minute. So let's go into an example to see what this looks like. So right here we have a chart pulled up and we're on the QQQ, and what we want to do is box in our previous day lows, and we can also box in our previous day highs. So these are the key levels that we're going to be looking for potential trading opportunities off of. As you can see in the after hours, you kind of perk above your previous day highs. In the pre-market, we start dropping right back down inside the middle of the range. And you can see we actually open up right inside the middle of the range. If I zoom in here, we're opening up right in between your previous day highs and your previous day lows. We actually open up right in the middle, which is called equilibrium. So as you can see, price opens up right inside the middle of the range, and you can see what happens. We basically open up inside the middle of the range, and what happens? We chop around for the first 30 minutes. And this is a general occurrence that happens on a lot of days, is that price is going to consolidate for the first minimum 15 to 30 minutes. And if you take a trade within the first 15 to 30 minutes inside of the range, majority of the times you are going to lose money. So do not look to trade within the first 15 to 30 minutes, and be a little bit more patient and selective, and potentially wait for a 5-minute opening range break or a 15-minute opening range break later into the session. Now let's go on to the second scenario that we have. So the second scenario that we have is that we're inside of the box, but we can be looking for a potential trade scenario. In this case, what we want to do is box in our previous day lows. We want to box in our previous day highs, but within the first 15 minutes, right, if price starts to break outside of the box, what does this signify? So instead of having a neutral candle that price is right inside the middle of the range, in this case, we actually have a very bullish candle. We open up inside the middle of the range, but you can see immediate buyers step in and price is now pushing above its previous day highs. This is a very bullish sign that price wants to continue towards the upside, because price wants to push outside the range within the first 5 to 10 minutes. This shows that buyers are stepping in and potentially want to break outside of the box and have continuation towards the upside. So in this case, what we can be looking for is a trade scenario where now we can be looking for either the 5-minute opening range, we can be looking for your previous day high retest. We just want to see continuation towards the upside outside the box and beyond. So let's go into a chart to see exactly what this looks like. So as you can see, we're on the next example here. We're on Netflix here, and what we're going to do is box in our previous day lows. We're also going to box in our previous day highs. And as you can see, we currently are opening up inside of equilibrium on day number 3. You can see day number 1, nice push towards upside. Day number 2, consolidation. Day number 3, we actually have an immediate push right off the bat. So within the first 5 minutes of market open, we end up having a really strong push towards the upside. We have a strong push above its previous day highs. So what does this indicate? Right? It basically indicated that we had a neutral open, but within the first 5 minutes, buyers stepped in and wanted to push price higher. If this is the case, what can we be looking for? We can now be looking for continuation continuation towards the upside using our 5-minute ranges. We can also use other key levels like our previous day highs and potentially other highs here as well for a continuation towards the upside. So if buyers want to step in within the first 5 to 10 minutes, this just shows that we can have a potential continuation towards the upside because now we're breaking outside the range. And if we're not ranging, we're going to be looking for a continuation. So as you can see in this case, once Netflix broke outside of its box within the first 5 minutes, and we end up having a really solid push towards the upside because we're able to break outside of the box within the first 5 to 10 minutes. Let's go on to scenario number 3. So now we just talked about the scenarios that can happen inside the box. Now let's talk about some scenarios that can happen outside the box. So the first scenario that we have outside the box is a continuation setup. So as always, we're going to mark out our previous day lows. We're also going to box in the previous day highs. And if price opens up right around your previous day highs, right? Let's say we mark out our first candle high and we also mark out our first candle low. What we can now be looking for a potential continuation is price is going to have to break above its opening range candle if we want to push towards the upside. So if we want to see some more upside here on the overall markets, it's going to have to, number one, hold above your previous day highs, which is outside of the box. And number two, we're going to have to break above your opening range candle for this continue pushback towards the upside. So in this case, we can use the 1 and 5 minute opening ranges. Since we're outside the box, we can be looking for a potential opening play towards the upside here on the overall markets. So as you can see, this is what it can look like. We can box in our previous day lows. We can also box in our previous day highs. In this case, we're opening up right around your previous day's highs. Now we can also mark out our opening range candles. So if I zoom in just a little bit here, you can mark out our opening candle range high. You can also mark out our opening candle range low. Price, as you can see, tries breaking outside here, was unable to, but once we have that nice break above your opening candle range high, we actually end up holding your previous day highs here as well. We end up having this super solid retest for this continued push right back towards the upside here on the overall market. So you can see how this works. If price wants to push higher, number one, it has to hold the box, and number two, it's going to have to break above your opening candle range high for this continued push back towards the upside. So it basically has to have two things checked off. You have to have the box break and you have to have the break above your opening range candle high for continued pushback towards the upside. And now we can go on to the final scenario we have, which is outside the box, and we can have a potential reversal in play. So in this case, we're going to box in our previous day highs and we're going to also box in our previous day lows. As I mentioned, this opening candle is very important. So this opening candle can be used for potential continuation, right, which was our last scenario, or it could be used as a potential reversal. So that's why the opening candle is so important along with your previous day highs as well. So if price does want to head now back towards the downside, right, it's going to have to break underneath this opening candle range low, and then price can continue back inside the range to either fill the gap or to gravitate all the way back down towards your previous day lows. So this is what's called a potential gap fill, which is going to be outside of the box, and you could be looking for a reversal back inside of the box. And this is what it looks like here on the higher time frames. So as you can see right here, what we're going to do is box in our previous day lows. We're also going to box in our previous day highs. So as you can see, price opens up at the very low of the box. We have our first candle marked out. Once price breaks back inside, you can see we end up using this as an immediate retest for a push back up inside your gap that we created. Plus price end up reversing all the way back up and towards the top of the box, which is your previous day highs. And you can see price, that's exactly where it rejected off at. So with this being said, now let's talk about some rules that we have when trading the box theory in combination with the opening range break as well. So as for the rules, what we're going to do is mark out the first candle in New York session. This is basically the first candle at 9:30 a.m. Eastern Standard Time. This is basically how to draw out that opening range. Second is if you are inside the box, what we want to do is wait for the first 15 to 30 minutes to play out. So if we're inside of its previous day highs and previous day lows, we're ranging, we want to wait for the first 15 to 30 minutes to play out. If price wants to push outside the box within the first 15 to 30 minutes, then we can be looking for a potential trade scenario. But basically in this case, what we want to use is the 5 and 15 minute opening ranges. So what we don't want to do is use the 1 minute opening range break inside of its box. What we want to use is the 5 and 15 minute opening range, just because we don't want to get chopped around and we don't want to get faked out on the lower time frames. If we're outside the box, we could be looking for a trade within the first 15 to 30 minutes. So in this case, we can be using the 5 and 1 minute opening range, just because there's a lot of volatility around the top and bottom of the boxes. So generally speaking, we can be looking for what's called a gap and go for continuation higher, or we can be looking for a gap fill reversal, and we can use the 1 and 5 minute minute in this case instead of 15-minute. Another scenario that we have is where you want to take trades in between 9:30 a.m. to 11 a.m. Eastern Standard Time. So this is a general rule of thumb when using the box theory in combination with the opening ranges, right? You got to think about what the opening range stands for. It's an opening range. It's not a range that happens later into the day. It's a range that happens right off the bat. So when we use the opening range breaks, they're meant to be used during the open. And then finally, what I always have is if a trade doesn't present a 1-to-2 risk to reward ratio, then I'm not going to be looking to take the trade, right? I like to risk $100 to make $200. And same thing, if I risk $1,000, I want to make a minimum $2,000. It's just based off the risk to reward ratio. And if the opportunity doesn't allow for continuation, then I'm not going to be looking for the trade. So with this being said, let's hop onto some charts and see some examples that I have for us today. So as you can see, we're on my first example here on AMD, and this is going to be a great example of how to use the box theory and when to look for a trading opportunity and when to look to potentially avoid the markets. So first things first, we're going to box in our previous day lows. And we're also going to box in our previous day highs. As you can see right here, coming into market open, you can see we actually open up right around equilibrium. So as I mentioned, if we open up right inside of equilibrium, preferably we're going to wait for the first 15 to 30 minutes to play out. And as you can see right here, if we wait for the first 15 to 30 minutes to play out, you'll see that the markets are fairly choppy. We're just unable to get above your 5-minute opening range high. We're unable to get above your 5-minute opening range low. And this is a great example of when to not look for a trading opportunity. When we're inside of its previous day range, when the first 15 to 30 minutes, there's no clear direction on the overall markets, you want to be a little bit more hands off and just wait until we have a more clear setup, which can either happen later into the day, or we're now just going to be waiting for the next day to set up. So now we're on the next day and we're going to do the exact same thing. We're going to box in our previous day lows and we're going to box in our previous day highs. So you can see in this case, price opens up the exact same way it did the previous day. We open up right inside the middle of the range. But what happens on this day? Within the first 5 minutes, you can see we have a clear push towards the upside. So within the first 5 minutes, we actually break outside of the box. And if we break outside of the box within the first 5 minutes, we can be looking for a potential continuation for a push towards the upside. So let's now mark out the key levels being your high on day number 1, and we can extend this over to day number 2. We already know what's going to happen. So let's just play the price action on the lower time frames to see how price will react. So you can see right here, within the first 5 minutes of market open, we actually have a really strong push towards the upside. So this is the box that we have created. We're now having this really strong push higher. We also have this down close candle here as well. If I go on to now the 5-minute time frame, what I can do is mark out this 5-minute candle high. So this is going to be what's called our 5-minute opening range. So now we have our 5-minute opening range established. We're above our box high here as well. What do I want to see in price? Right? I want to see now continuation towards the upside on the overall markets, because now we're breaking above our opening range high. We're breaking above your previous day highs and your box high here as well. And now we can expect continuation towards the upside off of this 100 key cycle. Now let's go on to the lower time frames. So we have our 5-minute opening range here marked out. Where can we be looking for opportunities? In this case, I like the opportunity around this 1-minute order block, which also coincides with the box high. We can also use this 5-minute opening range here as well, but there's not too many confluences around this one, but we can still have this level marked out. Now let's keep playing out the tape. And you can see, right, price is coming back into our 5-minute opening range. We're coming right back down into this 1-minute order block along with your 100 key psych in the top of the box here as well. This is exactly where I look to get in here on AMD. This is where we can get in with their stop loss just to break below. And what we can be looking for, right, is high of day and continuation towards the upside. As you can see, the risk to reward ratio is not exact because I got in on this 941 candle, risking off this swing low, looking for a continuation back towards high of day and above here on AMD. So as you can see right there, we ended up having that push up and towards your high of day. I actually ended up taking this trade on this day. I only sold a little bit of an amount at high of day and I'm stopping out the rest for break even. But right now we're just talking about just the technicals in itself and the logic and thesis and behind why we took the trade, not actually how we managed the position. So with this being said, let's go on to the next example that I have for us today. So as you can see, we're on my next example here. This is on Palantir. This is May the 2nd. And first things first, on Palantir, what we're going to do is just box in our previous day highs and previous day lows. So as you can see, this is our previous day lows. We can box this in, and have our previous day highs. We can also box this in as well. See, currently we're opening up right in between the middle of the range. So we're opening up in equilibrium. As I mentioned, what we want to do is wait for the first 15 to 30 minutes to play out. So if we box in our previous day highs, we can drag this over. Now we can box in our previous day lows, and we can drag this over here as well. So as you can see right here on Palantir, if we zoom out just a little bit, right, nice push towards the upside, right? This day, consolidation, day number 3, we're opening up fairly close inside the middle of the range. Now we just want to see what happens within the first 15 minutes here on Palantir. Now let's play the tape. So as you can see right here, within the very first 5 minutes, as you can see, we open up in between equilibrium. Within the first 5 minutes of market open, we have a very strong push towards the upside, breaking outside of the box that we've created. So if this is the case, now what we can be looking for, right, is continuation towards the upside, because now we're breaking above your previous day's highs. We're breaking outside of this box. Now we can go into the 1 minute time frame. In this case, the 1 minute time frame that we have marked out coincides with their previous day highs as well. So this is the exact area that we're going to be looking for continuation higher. So let's play out the tape to see if there's any sort of reaction around this 120. So as you can see right here for Palantir, we come back in towards our 1 minute opening range. We come back in towards our previous day highs, which is our 120. So far, there's no reaction around this 120 level. This currently doesn't mean that Palantir is bearish because it broke underneath its previous day's highs and its 1 minute opening range. We still could be looking for the reclaim setup back above your 120, which would be the 84% rule for this continuation higher, because the higher time frames is still intact, right? If price does want to still make a higher low, then we can be looking for Palantir to reclaim this 120 key level. As you can see right here for Palantir, we actually ended up reclaiming this key level, which is our 1 minute opening range. We end up reclaiming your previous day highs here as well. So this is the exact level that I personally get in here on this 940 candle. This is where I get in with the stop below. And in this case, we can just look to target a 1 to 2. I was targeting higher time frame levels, but for this sake, we can just be looking to target, right, a 1 to 2. You can go back left, mark out key levels here as well. But now we can play out the tape. As you can see, Palantir ended up having a nice push higher. We actually ended up having a pretty solid trend day towards the upside on this name, just based off the higher time frames. You can see how I used the box in this case, along with your opening range candles, along with the actual price action. Just because price is coming into a key level, I'm not just going to blindly buy at my previous day highs and my 1 minute opening range. I'm going to wait for some sort of strong reaction. And if we break underneath the key levels, if it reclaims key levels and the market structure is still intact, we can be looking for the 84% rule. And the 84% rules and the reclaims are actually better trades than the original retest in itself. And with that being said, I'm going to pop up my executions just so you know that I did take this trade in real time. And let's go on to the live session that I have for this day. All right, so with the keys, a little bit of reaction off this 487, which your previous day highs. Keep an eye on Palantir. Basically, your previous day high retest off your 120. I'll be looking at the 120 calls on Palantir off your previous day highs. I want to see the reaction. 1 minute opening range plus your previous day highs here. So as you can see right here, coming into the day, we have our key levels marked out. Palantir, we're showing a lot of strength coming into market open right off the bat. You can see a little bit of reaction off this 121, but now it's going to come back down in towards that previous day high along with your 1 minute opening range. I'm looking for a retest, looking for that 120 calls for a pushback towards the upside here. So far, no buyers kind of stepping off this previous day highs. Keep an eye on Palantir as well. Yeah, if you have a strong reclaim, I'd still be looking for like the 120s on Palantir. Okay, I got some of the 120s on Palantir. The 120 calls, 84% rule. So far, Q's reclaiming here as well. Stops going to be break above your previous day lows. So as you can see right here, I just got in some of the 120 calls on Palantir. We end up having this nice strong reclaim above your previous day highs along with your 1 minute opening range. Now I'm looking for this continued pushback towards high of day and above, with the Q's also reclaiming your 1 minute opening range as well. Look to take some off at this 121, and then we'd like to see some strength here with the Qs on this next leg higher. If Qs can push and SPY, we should see a new high on most of these tickers. Palantir, if we can close above 121, next levels is really back up in towards all-time highs. But for this one, as it moves higher, right, you want to scale along the ways, but clear levels now, back up in towards, it's very far away, but it's your 125 all-time highs. As for Palantir, nice push towards upside. We're now reclaiming above key levels. Now we're actually getting above this 121. Next levels is really this all-time highs level that we do have. With Qs hitting highs, I actually end up just taking some off on Palantir. That's $3 a contract.
Now the next level I'm going to have is basically just this 122.
So as you can see, just kind of scaling up along the ways here on Palantir, end up being a super solid trade off that reclaim of your 1 minute opening range along with your previous day highs. This ended up being super nice. You can see the Qs basically consolidating, but this is a great example of using relative strength here as well. With that being said, let's go on to the next example that I have for us today. So as you can see, we're on my final example for today. We're on Tesla. This is on the 9th. This ended up being a super solid trade. What we're going to do is just box in our previous day highs. We're going to box in our previous day lows. You can see on this day, end up having nice continuation towards the upside. So we're going to do the exact same thing. We're going to box in our previous highs. We're also going to box in our previous lows. So far, coming into market open, we're about to have an open above your previous day highs. So if you have an open above your previous day highs, we can be looking for the first 5 minute candle to develop, and we could be looking for potential continuation towards the upside or a potential reversal if it breaks underneath its 5 minute range. So now we can mark out your previous day highs, and now we can box in our previous day lows, and now we can play out the first 5 minute candle coming into market open. As you can see right here, within the first 5 minutes, Tesla is having a really strong push towards the upside, indicating that price is gravitating away from its previous day highs, right? Pushing outside the box that we've created. Now what we can do is mark out the first 5 minute candle. So in this case, price is very bullish. We can mark out our first 5 minute candle, and we can be using this first 5 minute candle for this continued push towards the upside. Now let's go on to the 1 minute time frame. You can see that price is now having this nice push towards the upside. We're having a couple reactions off this 5 minute range. So what we have in this case is basically your first dip. We also have your 5 minute range here. This is basically where your down close candles are. So if Tesla does want to continue higher, you can be looking for an entry with a very tight stop. In this case, you can be looking for right continuation back towards the upside here on this name. This is actually a trade that I ended up taking. I personally got in an entry a little bit earlier at this 932 candle. I'll talk about this a little bit more here on the live session and what my thought process was. But the second best entry would have been off this 5 minute range, looking for this continued push back towards the upside here on the overall markets. Now let's play out the tape. And you can see Tesla end up having this super solid push towards the upside. We end up gravitating towards higher time frame key levels, but basically this was a super solid reaction off of number one, your box high that we created, which was your previous day highs. We also had your 5 minute range, which if we did want to push higher, as I talked about earlier, it's going to have to get above your previous day highs, and it's going to have to get above your opening range candles if price does want to continue higher. So with this being said, I'm going to pop up my executions here once again, so you know I did take this in real time. And I'll also show you the live session that I have for this day.
It's going to be this 568 along with this 566. As for my top watch now, you can see Tesla showing a lot of strength here in the pre-market. We talked about this one earlier into the session, how it had strength. Now you can see we're actually breaking outside this in the pre-market. This one has a lot of strength. Qs consolidating inside of its previous range. Tesla showing some strength here above its previous day highs. Tesla, this one, really solid setup if we can retest its previous day highs for this continued push back towards the upside. Tesla does have a lot of room back up and towards now. It's going to be the top of the range, being this 295. So what I would like to see, hold above your previous day highs and use this level as support for this continued push back towards upside. So that's what we'll be looking for.
So as you can see right here, coming into the day, Tesla's showing a lot of relative strength compared to the overall markets. What we're now going to have marked out here is this box high, and what we're going to be looking for is really this continued push towards the upside right off the bat towards your 295 and above here on Tesla.
So far, Tesla's showing a lot of strength here with the Qs. Qs, we're trying to get back above this 490, but you can see Tesla, a lot of strength up and towards our top of the range here now being this 294. Yeah, Tesla very bullish, as you can see above that 294 here. Now, really for Tesla, you just be looking for the break above your 294 and immediate retest for a continuation high. You can see a little bit of reaction here off the Qs, which is this 4090.80. Tesla, really solid push up and towards this 295.
So as you can see so far, Tesla really solid push right off the bat. We got outside of your previous day's range. You can see a really strong push above this 295. What I'm basically looking for now, hold of this 295 since we have relative strength for this continued push towards the upside versus the QQQs. For Tesla, this was basically a higher time frame breakout. It's based off the relative strength within the first few minutes here as well. We can expect this to have continuation.
As for Tesla now, this 295 is key. You're either going to be looking, we're most likely going to be waiting for the break above your 295 now and an immediate retest for a potential continuation. All right, with this Tesla strength, I'm going to get started here on the 300s on Tesla. This one's showing a lot of relative strength. I'll look to add on all pullbacks back up towards 300, but my risk is going to be this 295 pivot level. This one, a lot of strength coming to market open. My area is, if as long as it maintains this 294, I expect this to continue towards the upside.
So as you can see right there, just based off the relative strength here on Tesla, I took some of the 300 calls. It is so strong compared to the overall market, higher time frame breakout. Whenever Tesla does have these breakouts like this, sometimes you have to understand the ticker personality, and Tesla's just so strong. I'm expecting all dips to get bought up for this continued push towards the upside. So this one's based off of your risk amount being that 295, and we can expect Tesla to move higher. So as you can see so far, Tesla getting this nice reaction off your 9 EMA along with your 5-minute opening range here as well. As long as we maintain above your 298, I like to see Tesla push up and towards 300 and above on the higher time frames.
303.94 is that daily high that we have the next level here for Tesla.
Tesla pushing nicely towards upside, holding that 9 EMA, holding that 5-minute opening range. Now we're getting above key levels, being that 300 key psych. We just want to see every single down close candle be respected, and we just want to continue back up and towards the next levels that we have, which is 303.94 and above. But yeah, as you can see right there, I sped up the tape, but Tesla, super nice retest off your 5-minute opening range. End up just having continuation. You can see this huge trend towards the upside. This is just relative strength compared to the Qs. You can see Qs is inside of its range in the first 30 minutes. Tesla extreme relative strength with this higher time frame breakout. So this ended up being a super solid trade that we identified in the pre-market, and then we came into market open using that opening range along with the box there as well to help us capture this move towards the upside. And with that being said, I hope you guys enjoyed that video talking about the box theory in combination with our opening range candle as well. If you guys did, I'd appreciate if you guys drop me a like and sub. We're close to 100K, so that's super exciting. And with that being said, I'll see you guys next week for a brand new video. Peace.